The price of Bitcoin is very likely going to go to lower levels. That is with or without a dead cat bounce. And I'm going to explain why in today's video update, going through the internal levels of technical analysis, realizing where the price could actually bounce or get rejected, and the different projections that we do have. Of course, giving you something clear here on the higher time frame, because we were in a very large range since March. We are not in a massive bull market here in this range. We are not in a bear market. We're just in a big fat range, and we need to analyze very carefully where the price could reject and bounce throughout the next coming weeks and days. Now, quick reminder, guys, the World Series of Trading registration has started. There's a $10 million prize pool for the winning teams. I want you to join my team. I have left the direct link to join my team down below, guys. And if you haven't got a Bybit account, make sure to sign up. You do get that $500 airdrop position. Just follow the steps and you got a free trade of $500. But I want you to join my team, and the trading competition starts in 7 days. Let's dive in here right away through the technical analysis. For all of those people out there that are perma bears or perma bulls, we do not know what the heck is going on. We do have war going on. We do have the possibility of depression, recession, right? That is pure speculation. We are still very much uptrending on the higher time frame. Now, for those perma bulls, you know, are we going to be hitting all-time high in October, November? Q4 should be bullish, maybe Q1 of 2025. We need to analyze the levels here, and this is why I am here. We're going to talk about the technical scenarios that could happen. This is very confusing, very complex corrective structure, and we do not know where the price is actually going to burst in the next coming weeks, either to all-time high or finally to come below the lows from August. But overall, we can detect several scenarios and take a look at probability. The first slightly higher time frame one is very interesting. Shout out to 𝗕𝗏𝘆 here as mentioning this throughout his video updates the last few days, and that is this contracting diagonal, which is very possible, speculating that the low is in here in August, okay, the 5th of August, from that major drop. And there's only one major reason why you would believe that this is a possibility. Well, as you can see from the low, we have been forming three-wave structures throughout the last few weeks. Here in August, as you can see, there's no big major impulsive moves, no way to count how you can find 5 impulsive moves up. Throughout September, we're actually very, very clear and very vocal about this scenario, seeing here how we have been forming 5 waves to the upside, 3 waves here to the downside, then another 5 wave here to the upside, and right now, obviously, getting this pullback down. Okay, so there is clear 3-wave counts here throughout September. So you come to the conclusion, hey, we are very likely just going to be still continuing with this 3-wave move counts, right? So this is why I do see a very high chance that the price is actually going to correct down with a significant bounce or without a significant bounce. And for that, we need to zoom in on the lower time frames. Now, the main reason why I do like the $57,000, $56,000 range is because we do have the golden pocket from the pivot low here of the 7th of September to the high from last Friday. This zone would be absolutely golden. You know, you do have a higher low right over here. You need to speculate that, you know, this is kind of your limit zone to start forming a higher low in this area. Could we hit 7/8 Fibonacci? That would already be looking quite disturbing. All right, it would be very, very aggressive coming down to 55K zone. I would expect that 57-ish, right, give or take a few $100s up or down, should be the zone where the price is actually looking for a bounce. But first, we need to form some kind of 3-wave structure to get down there, okay? First of all, we need to start forming this scenario to believe that, okay, guys, this is looking good. We formed a 3-wave move to the downside. We've packed with 3 waves here throughout the last couple of months, and we could believe that the next impulsive move right to the upside, well, in a 3-wave structure, should be happening once that has happened, right? So let's go internally on what is happening throughout the last couple of weeks, right? In the last few days. Basically, this uptrend that was broken on Monday, right? Just keeping it simple, basic technical analysis. We got a nice uptrend channel here, as you can see. And now the price getting a reaction, consolidation throughout the last few hours. If we do zoom into the lower time frames, we are speculating on, okay, how have we moved down throughout the last few days? Well, we can see that the price is moving down very aggressively, and you can count more than 3 waves, right? If we would have had a 3-wave structure, this had to be it, and we started to recover if we're going to speculate on an ABC. That was not the case. We got a very aggressive move down just yesterday. So we already can count 5 waves down, meaning that there is 2 massive bearish case scenarios. One of them being, okay, we have completed 5 wave moves down, and the 3rd wave is not the smallest, okay? The 5th wave is the largest. As long as the 3rd wave is not the smallest, this is very much a valid count with an expanding 5th wave. If that were to be the case, we are expecting some kind of bounce here to the upside in a 3-wave structure if possible. Now, the major levels that we are looking at here to speculate either in a wave 2 or a wave B most commonly would be in between the 50% and the 7/8 Fibonacci. Of course, a B wave can actually get above an A wave. We will leave that scenario if we're going to start V-shaped recovering for a speculation. But for the moment, we are looking for that 3-wave structure continuation, all right, to the downside with or without a bounce. And I'll explain if we start in breaking down here below the lows that we formed very early this morning or late last night, depending on where you are, then I would speculate that this impulsive move has not finished. Then this is not 5 waves down, because if you do form another leg to the downside, then you're having 7 waves, right? That would not make sense. You either move in 5 waves or in 3 waves. And that comes to this conclusion right over here. If we were to break down from the lows formed yesterday night, then we are still very much moving impulsively to the downside, and we're still not seeing a 3-wave corrective structure. So if we break down from this level successfully, we need to come to that scenario where this has been a wave 1 throughout the weekend, last weekend, a wave 2 right over here, and we are still inside of a wave 3. And why should we still be inside of a wave 3? Well, if you do break down from here, you need to start micro counting the waves that we've had throughout the last few days, meaning that right over here we've had an impulsive move in a 1 wave, a 2, a 3. This has been the 4th throughout the last few hours, and then we're going to create that last 5th wave. Let me just change this color so you can actually see the scenario. If we do break down from this low, we just need to come to this conclusion. There is no other way to count this, because you're not forming 7 waves. It means that you are still inside of a 3rd wave, and that you are not still finished, okay, with this impulsive move to the downside. So if we do break down, I would be expecting the possibility of a 5th wave here, and I would be interested in a kind of a failed auction scenario, at least to get back above $61,800, which is the lower highs that have been formed today. That is only if we move down. If we move up from here, I'll be explaining the different scenarios. But if we move down here, then I would be expecting a high probability chance to come and sweep up this lower high right over here, which would be the 4th wave inside of this larger 3rd wave. I would be looking for a failed auction. I would be looking for the price to dip down below 60K. And I will be remaining patiently, because I would be interested in this kind of double bottom. And I would be targeting the lower highs right over here. Now, that would be a long position to take profit, to then possibly speculate in a short position as we are forming a higher time frame 4th wave. Of course, we will be have to take a look at Fibonacci from the pivot high here of the wave 3 to the low of wave 3, wherever that ends, and we'll have to speculate in between 382 and 50% right? This is all imagination until we get those waves. But, you know, if we do get that wave, then those are some scenarios that I'm looking at here throughout the next coming hours and days. Now, what if this does not happen, right? We still need to see that movement down. You know, this is still not confirmed, right? This maybe has been the completion of 5 waves down over here. And we will know that if we start moving above, okay, very aggressively. I'm trying to get this 5th wave right over here. If we start moving up here very aggressively, then we'll have to believe, of course, that this has been the completion, right? If we start getting here very close, all right, overlapping these pivot lows, then we cannot come to the conclusion that we are going to lower levels. So taking a look at Fibonacci here, from this pivot high of yesterday to the pivot low, if we are going to start overlapping the 618 and the 78 Fibonacci, also with the lower high resistance trend line, we would have to believe that there is a high chance that we are going to see a larger 3-wave corrective structure. I will be aiming at least for these highs. I will still be bearish. I will see this as an impulsive move to the downside. Any breakout from this lower high resistance and the price moving to the upside, potentially to above $64,000, is where I'm going to be looking for the next day trade short position that could end up in a swing short, because I am expecting that larger 3-wave move down. And there's only one main reason why, because we have moved down very impulsively with 5 waves already. So if we start climbing up here, breaking above the 618 from the latest drop, the lower high resistance trend line, then, you know, I have a clear target zone, which is very likely going to be this level. Yeah, there could be some scalp long positions. We'll be analyzing very carefully. If we do break above the golden pocket, okay, if we were to get up there, guys, I still believe that this could be a lower high and we're going to break down 50% Fibonacci, even to the 618. That is where we have the lower high resistance. You know, I know we're expecting a breakout or a reversal, but this is resistance and you could get that leg down. We are very much downtrending. This will not be a zone to be excited. Are we actually eyeing for a possible short position here in between 50% and the 618, depending on how the price reacts, or even more conservative, looking for that move up and look for the failed auction, losing that low throughout the last few hours, that high, and look for that 3-wave completion and then failed auction, stop loss at the highs from the rejection. You're getting back below here, trigger that short position, and basically, in a nutshell, as we do get that rejection, you know, you're basically looking for something like this, right? But we need the rejection from that level for that confirmation. If the price were to break through here very successfully, we're smashing through above 618 Fibonacci, we're breaking out the trend line, I will be expecting these highs to be taken. I think that is a, you know, very, very likely scenario. This would be the zone that I would be interested in looking for short positions. Why? Because after a 5-wave impulsive move to the downside, it is very classic for an ABC 3-wave structure to get above the 4th wave, in this case, in a downtrend. It's a great level for a swing failure pattern. And when we take a look at Fibonacci retracement from Friday highs all the way down to the lows of yesterday, we can see how that golden pocket 61865 Fibonacci is exactly where we have this speculation 4th wave, which is very classic for an SFP, guys. All right, this is really, really a good setup. It's one of my favorites, right? Get back to the 4th wave. You know, you got some Fibonacci confluence, golden pocket, the most respected fib level, and it would make sense to create that kind of failed auction, right? And, you know, basically look for a decent pullback. Potentially, if we do move in a 3-wave move up here, this is already a good level for either a wave 2 or a wave B. You know, I would be even speculating that this zone could be a good swing short position, right? We are looking for that kind of 3-wave move down. If we were, I mean, the price is very bearish, guys, and the price could break down in the next coming hours. It's just some projections and some ideas that could happen, right? If you suddenly see out of nowhere, you know, a big V-shaped recovery scenario, I would still be very skeptical. I'll still be looking for short positions, but I'll be very careful. Could we even come all the way up to the 7-8 fib at 65K? right? Yes, and it's going to be very difficult as it's kind of V-shaping, right? To get into a short position. You don't want to fight the trend. You want to see exhaustion and you want to see some levels of resistance, right? Fail as support. In this case, obviously, these highs for me will be a great guide to actually check the price action if it is going to reject from it, to look for either a back test or a very aggressive short position as you lose it, to then speculate for that next 5 wave moves to the downside. So you're just going to have to, these are the levels of interest on slightly higher time frame, guys. We are very far away. We might as well just create a lower high from here and break down from the lows. If that were to be the case, the next trading plan is simple, guys. It is basically a double bottom or a swing failure pattern, failed auction, whatever you want to call it, and looking for the recovery above this low over here. Because that means that this will complete 5 waves down in a third wave, a very aggressive large third wave, and I would be looking as a target at least the lower highs from today if that were to be the case, right? We're trading the waves, the levels, guys. The price action has those levels and has those setups for us to get into some trading opportunities. So this could break down aggressively. It could hit 59,500, right? It could hit 59,000, but overall, I will be looking for the possible recovery. This is going to be my target zone. I know how to trade this, but I need to see the recovery and I need to see that development of the price action. If the price waterfalls and suddenly goes to $57,000, then I would have to say that this is still a strong impulsive move down, right? We need to see some reaction, some levels reclaimed to look for the trading opportunities. I do not trade major waterfalls unless I have a clear level. And the clearest level that I do have, if we waterfall for a bounce, right? I don't want to FOMO into a short position because we do get the bounces at some point, right? I want to speculate on which exact level could get that bounce if we were to waterfall, right? Because then we're talking about some waves and scenarios, and then just in a few hours, we suddenly drop $4,000, right? Well, where could the price bounce? Well, for me, it is pretty clear. It is this higher low that we do have from the 18th of September. The main reason why this is a good higher low for a liquidity grab and a bounce, it is because we are from the pivot low to the pivot high. Very nice confluence here with the 50% Fibonacci, as you can see. If we were to come down, this is 59K, sorry. If we were to come down to 57K, then we do have the golden pocket. Both of the levels are good, okay? They're good Fibonacci levels from this major uptrend of September. Smaller reaction, bit choppiness, but the 382 did get a bounce of a few $100 yesterday at 61,100. It actually went all the way up to $62,000. So the bounce did happen yesterday at the 382 fib, guys. When we do zoom in and analyze very carefully, you can see how we bounced from that 382 just over $2,000 from 61,100 coming all the way up here to 62,200 range. Then we came back down, but the bounce happened. What I do like, okay, that you did pierce through ever so slightly below the 382. If we pierce through here the $59,400, we're looking for this low to get that reaction as a liquidity grab, right? Get that 50% Fibonacci holding very nicely. Levels that I'm paying attention, if you waterfall down to 57,500, then we do have, of course, this higher low right over here, which is with the golden pocket from the entire move. These higher time frame fib levels from a major uptrend, they are very good to get into some scalp day trading setups, guys. A little bit of higher time frame scenarios, but lower time frame has been explained. Look for the low. If we do fail auction, I would be looking for a recovery. Nice day trading setups. We're moving with the waves. We realize that this could be a third wave completion. Then we're looking for a larger bounce, then possibly another move down here. If we are taking this low and we recover, then I'm looking for this high to be taken, and then I would be looking for a next leg down because this would be a higher time frame fourth wave and then a fifth wave here to the downside. Okay, that is basically it for this episode, guys. Just looking at the levels and the trading setups that I would be interested here throughout today and tomorrow. Thank you very much for joining, and I will see you in the next one.